As a swing trader who's been in the crypto markets for 10 years now, I'm constantly looking for new opportunities to maximize my growth with minimized risk. And in today's video, I'm going to go through one strategy that I've started to use a lot more actively to capitalize, especially on my stable coins as I wait for the market to reach a cycle low. Now, even if you're of the opinion that we've already put in a cycle low and we've in fact started a bull run, don't go anywhere because this video is still for you. But for those of you that want to see how I view the market, let's first go through a couple of things to see cyclically where we're at within this crypto cycle, and then we'll delve into the various different ways that you can capitalize and grow your overall portfolio, whether that means that you're holding predominantly USDC, USDT, Bitcoin, or maybe even Ethereum. So stay tuned till the very end of the video, smash the like button, and let's get into it. Markets rarely, if ever, go up in a straight line, and instead we notice a cyclical pattern of certain periods whereby the market goes up, followed by certain periods where the market goes sideways, and followed by certain periods where the market goes down. These are known as uptrends, consolidations, and then downtrends with reaccumulation before going up once again. And if you actually have a look at the previous cycles, which I've overlaid on this chart, it shows not only the return on investment over time from the low to the high, but also the cyclical nature in terms of the timing and how these cycles tend to play out for Bitcoin. So having a look at this chart over here, you can see the previous cycle that we had was the purple one, and very similar to the fourth cycle, which was 2021 highs, and the third cycle, which was the 2017 highs. You can see that the timing held very true in the sense that the cycle lasted approximately 1,060 days long. And following that, we expect, that the market cycle would top, and consequently, we can measure out both the depth and the duration of how long these cycles would last. Now, currently, we're following the purple trajectory over there, which is peak 5, and we're looking for the 6th bottom of this cycle before initiating an uptrend. So in today's video, I want to go over the duration, how long this would potentially last, and also the depth, how low will prices potentially go. And the importance of this and the reason that I'm looking at this is because, of course, if it's my belief as a swing trader that prices are still in a bear market and we're consequently going to be going down a whole lot lower, and I'm predominantly holding stable coins whilst waiting to buy the dip, of course, we're going to be looking for opportunities to put those stable coins to work. And that's the point of today's video, is to show you exactly how you can capitalize on this. Now, this video should never expire because whether the market is going up, sideways, or down, there's going to be opportunity for you based on what I'm about to share. And I'll show you exactly what I mean. Now, if we're looking in terms of the depth, we've played out pretty much very similarly to what we have in the prior bear markets once the top had been put in, and we've drawn down now, as you can see over here, for about 203 days. But in terms of the depth, we still have a lot further down to go, potentially as much as 50%. Now, for those that don't have the ability to withstand massive volatility, that may be really problematic. So consequently, you may be sitting in stablecoins, which is very similar to me, until such time as you see a meaningful uptrend start to form, or until such time as you reach the duration, which we're going to be looking at around 360 days. So call it 1 year from top to bottom. The bear markets typically take 1 year to play out. So therefore, according to the data set that I've given you over here, in terms of duration, we're only about halfway through this bear market. In terms of depth, believe it or not, we're also only about halfway down in terms of how much further down we could go. So if we pull up a chart and we actually have a look cyclically at what's happened every single other bear market, and we measure from the trough to the peak, and we use the Fibonacci tool to see how far the drawdown was and where the bottom in the price action formed, what we find is something very repeatable. And I'm just going to circle that. We find that price tends to find a bottom between the 0.786 Fibonacci to the 0.886. Now, I've taken the liberty to color code this so that you can differentiate between each of those various cycles. So in this instance, this was cycle number 1's low. And then you can see you initiate into cycle number 2, and we measure all the way from the bottom of that cycle to the top of the cycle. And lo and behold, what we find is that price again bottoms right in that Fibonacci zone between the 0.786 and the 0.886, in this instance represented in green. And then we do the exact same exercise and we measure from all the way at the bottom to the top of the next cycle, represented in blue, the 0.786 to the 0.886. And I'll circle that over there. Once again, price finds its bottom. So we have a bottom 1, a bottom 2, a bottom 3, and now we're waiting for the fourth bottom. Now, history doesn't always repeat, but it very, very often rhymes because the markets are driven by human emotion. And if there's one thing that's consistent in life, it's human emotion. Human emotion tends to follow a very, very cyclical path, and the patterns tend to repeat. And if this is true, well, then our expectation would be that despite we currently see a little bit of green in terms of these candles over here for this month, the expectation would be that lining it up, not only with the depth, but the duration, we have a timing target and we have a price target. So the timing target is going to be coming up around October. It could be anywhere between September and November. So we've given an average timing target of October 2026. And therefore, the drawdown target or the depth target we're expecting again would be between the 0.786 and the 0.886 Fibonacci, which gives you a price level of $28,000 to $39,000. Now, there's something really powerful that you can do with this if you know how to trade and if you know how to put that money to work. And that's the blueprint and the plan that I actually want to give you in today's video. So the aim is basically to buy low and sell high, something that many of you have heard before, but may have struggled to put into practice. So for those of you that have been following for a long time, you'll know that I was pretty vocal about scaling out of those positions as we're approaching about day 1050 in terms of the low to high, which meant that we were selling between about $110,000 and $120,000 on Bitcoin, moving into stablecoin positions. But we want to put those stablecoins to work, and that's what I want to show you in today's video. And as this starts to come down into the bottom of this zone over here, we'll look to take profits off of what we're going to make off those stablecoins with a very low risk strategy, and then reallocate into Bitcoin, and then still put that Bitcoin to work. So in terms of the trends, it's been pretty simple. You can use something as easy and simple, which is a free tool to use on TradingView called the Super Guppy Indicator. And what it effectively does is it just shows you when it's green, you're long, when it's gray or red, you're out of your positions, and you're probably holding stable coins, waiting for it to flip back green. So therefore, what it means is you're going to be holding the strongest assets, which historically has been proven to be Bitcoin. Out of all of the cryptocurrencies, it's stood the test of time, and it's outperformed 99.9% of all cryptocurrencies over time. So Bitcoin is usually the standard, the one that I look to hold, and I want to maximize my Bitcoin on the way up, and then I still want to maximize my USDT or USDC, that being the stable coins, on the way down. So we're still waiting for it to flip green like it has in the prior cycles. As you can see over here, right now on a 2-day chart, the Super Guppy remains red, slowly starting to turn gray, but sometimes you do see these pauses along the way where it can intermittently flip gray and then turn red once again. So it's always better to wait for the green before getting fully loaded up on Bitcoin and looking for the trending move. Now, this is simply just a very easy to use tool for any of you at home to use, even if you've never used TradingView before. This is very simple. You just put on what's called the CM Super Guppy Indicator, and that should be able to assist you whilst looking at the 2-day chart. Now, we know that the space is becoming increasingly regulated, which many will argue is actually a very good thing for crypto. We have two various different acts that are currently coming up. We have the Clarity Act, which of course is for the majority of the cryptocurrencies. And then we have the Genius Act, which is for the stablecoins. So the stablecoin supply consistently seems to be growing, and it's one of the biggest use cases when it comes to crypto. So it's worth your while finding out ways to allocate that portion of your portfolio to still receive growth. Because this is what people do in the real world, right? They buy T-bills, they put it into savings accounts with big banks like Bank of America, Chase, etc., and consequently they're receiving interest. So how do you take advantage of this in something like crypto? Well, I actually covered this in a video a couple of weeks ago. It was on the 25th of March, and we went through various different yield platforms for crypto. And one that stood out was Nexo. So if we go through into Nexo, I took the liberty of creating a research report with a live calculator that any of you can play around with and use to calculate what you may be looking at in terms of whether you're using Bitcoin, Ethereum, or USDT. I'm going to show you exactly how it works in a minute, but first I just want to let you know that there is a link in the description below if you want to check it out. That's to both the calculator and the actual Nexo platform. So before we get into the calculations of what you could potentially be making, let's start off by looking at the report over here and some of the main things that stood out for me and the reason why I've personally chosen to use Nexo above and beyond a whole bunch of the other platforms. Now, first and foremost, understand smart money doesn't technically sit on the sidelines during a reset or consolidation. We're still in a healthy market. We have the Clarity Act, the Genius Act. Crypto is still developing as a space, and stablecoins are probably one of the biggest portions of that space. And for those of you that have used crypto for a long time, you'll know exactly why and exactly what I mean. Now, some of the main things that stood out for me in terms of my position size when it comes to an investor, how much I hold in the crypto space, things that I value the most is not necessarily the highest yield, because oftentimes this comes with very high risk strategies that could lead to huge liquidations for the yield bearing platform. However, one of the most important things to me is going to be safety, right? How much money do they back, and how much confidence do I have in the regulation around their platform? So Nexo is one of the most regulated, most sophisticated, and most trustworthy when it comes to the yield platforms. They are the number 2 largest crypto lender. In terms of open long positions that they have over 2 billion, and that's been verified. That's $2 billion with a B, and that's been verified by third parties as well. They've paid $1.3 billion in interest to their clients since inception, which was in 2018. And currently they have a big book, right? $8 billion asset under management. This is something super sizable. So what I did is I went and I created a comparative table across not only Nexo, but various other top ranked platforms, which I don't want to knock down. So I haven't named them over here. But point being is when you have a look over here, Nexo tick pretty much every single one of the boxes. They're fully collateralized lending, which means for every single dollar that you put in or any other client puts in, that is backed one-to-one. They have every single one of those dollars. They're not borrowing out the way that the banks do and leveraging off of their clients. They have US regulated custody via backed 24/7 automated risk engine. They have market neutral yield strategies. This is very important because when it comes to yield platforms, some of the ones that promise massive yields that sound too good to be true are oftentimes too good to be true because they're choosing directional bias, right, when it comes to trading on the markets. And typically when it comes to earning yield, you're looking for things that are much lower risk, right? You want stuff that's slow and steady, such as neutral yield strategies, right? So meaning they're completely hedged in their positioning. They have daily compounding interest, which is important to me. It means that at any point that you decide to remove your capital, you aren't gated or locked in until, for example, the end of the year, which many of these platforms tend to do, which means that, for example, if you put in $100,000, you wouldn't receive any of it if you withdrew before the end of the 365-day period. That is not the case with Nexo. What happens with Nexo is you actually consistently every single day earning interest, which means at any point in time that you do decide to withdraw, you can withdraw that interest with your initial capital. They have a wealth tier loyalty program, which I will go into a little bit more detail on today, because this is going to affect how much you're actually able to get out. And with that being said, let's go straight into those wealth tiers, right? So you have 4 different wealth tiers, and it of course depends on A, how much you've put in, and B, what is your ratio between your coins that you want to earn yield on, so your cryptocurrency, whether that be Bitcoin, Ethereum, or the stable coins, to the Nexo token. So if you put in a certain percentage, around 10% in Nexo as a token, well, you'll get an accelerator bonus whereby you can unlock the highest form of yield. So there are different types of names for these. I'm going to go over both. If you read certain articles, you'll see names such as Classic, Premier, Elite, Signature, which is what I have in my research stack over here. And of course, if you go through onto their site, what you'll see over here is it's labeled now as base, silver, gold, and platinum. Of course, platinum would be interchangeable with the term signature, just so keep that in the back of your mind's eye. At the moment, I'm currently in the platinum tier. I'll show you exactly how to get there as well without putting 6 figures down. So now that we've looked at the Wealth Club, feel free to familiarize yourself with it and run various different scenarios based on how much you may potentially be putting in. Let's have a look over here at the various different yields, right? You got the credit section, you got the yield section over here. Since I'm predominantly dealing with USDT, I wanted to give you an overview of what you'd be looking at if you were in the highest tier, right? If you were in what's labeled the platinum tier, or on my report over here, the signature tier, and you were holding USDT. So I have a sliding calculator over here, which you can use to pretty much run your own various different scenarios, anything from $5,000 up to $10 million. Of course, I do have to mention that in no circumstance would I ever put 100% of my capital onto any kind of platform, whether that be a crypto exchange or a yield bearing exchange. However, I would always consider putting a portion of my portfolio on there to earn capital along the way, because not your keys, not your coins. Remember that we always need to consider various different risks, and you just never know what could happen. So with that being said, if we have a look at the yield calculator over here, you can run it on a sliding scale, and you can see that from classic to signature, your yield is going to vary anywhere from 7% APY up to potentially 10.5% APY, and that's on USDT. If you have a look at Bitcoin over here, because Bitcoin's a volatile asset and it's constantly moving and fluctuating, you might not get the same kind of yield that you would, for example, on USDT, which is stable, right? It makes for much easier strategies for the platform to go and fetch that yield for you. And consequently on Bitcoin, it's a little bit tougher. But Bitcoin, 3% up to 6%. And then on ETH, you're looking at 4% up to 7%. So you can see this is one of the best within terms of the industry, especially when it comes to real world backers and the overall portfolio that they're managing, which has been basically it survived through major events, whilst things like Celsius, Voyager, and others collapsed in the 2022 bear market. Nexo remained fully solvent with zero exposure to third parties, and consequently, their client record still remains, right? Their client record still remains over there, and they've done really good things. So with that being said, let's go through onto the platform, and I'll just quickly show you the platform over here. So making it really quick, I have just deposited $20,000 onto the platform to start to put to work. I've just done this now as we began this video. So you can see already it's showing available to borrow in terms of a credit line, because they do have a credit feature. You can borrow $18,000, pretty much round up slightly, $18,000 out of the $20,000 that I've put down. Of course, your original amount is going to be collateral over there. And then you'll see that I'm a platinum tier. They have currently a promotion. If you use the link in the description below, this is for US-based clients as well. If you deposit $5,000 or more, you'll immediately be bumped up into platinum tier. But please do read through the description below, because it will explain to you that it only lasts for a certain amount of time. And then you're going to have to start to rebalance the ratio between Nexo tokens and actual cryptocurrencies to maintain that platinum status. Otherwise, what it's going to do is it's going to earn you interest under the platinum tier, and then later on it's going to drop you back down into one of the other tiers, whatever criteria you meet below, whether it be silver, gold, or base. So you can see everything is listed over here. Stablecoins, 8.5%, really, really, really good there. And then you're earning the extra bonus of 2%, which is where you would see those numbers that I've given you on my calculator might differ just marginally. It's because of that 2% is going to be paid out in Nexo bonus, right? So if you have a look at the Nexo platform as well, and you go to the top right, you'll notice that a lot of these platforms have started to integrate all their information into an AI model, very similar to ChatGPT, but it knows everything about the platform because they've fed it all the data, all the relevant information, and run various different scenarios. So you can actually go through, and you can also ask questions over here if you don't want to use my research tool over here, but you want to actually sign up and go in, click those stars over there. So I was currently playing around with this, and I said that, tell me what I can expect more or less if I put $20,000 into my portfolio to earn interest. It's currently in USDT, and Nexo basically knows what's in your account, of course, because the AI model is connected. And it says over here, with your setup, I can walk you through a clear estimate but it will just be an illustration. So it's saying that for platinum used with USDT in a flexible savings, right, the current interest rate is 7.5% per year, which means that you're going to make about $1,500. So that's $21,500. Now, I want to remind you of the importance of this. The importance of this is that we're just trying to protect our capital and allow it to still tick over and still work for us while we wait for those lower prices, as opposed to over trading and getting completely liquidated or wrecked in the market, which happens to 99% of traders. Believe it or not, the very few traders that ever do sell the top, there's even fewer of them that maintain that exposure all the way down to the bottom to reallocate into BTC over here, because they overtrade on the way down and they get liquidated and they lose absolutely everything. So don't let that be you. Consider some alternative ways that you can maximize your stablecoins while you patiently wait for those low prices. So for those of you that are going to be looking to maintain your exposure to the loyalty program, remember that you need to allocate about 10% of the portfolio into the Nexo token. So let's quickly have a look at that token just so that you get a bit of an eye for where it's at. So currently it's trading at 89 cents. In a bull market, probably this goes up over time as more people are going to be looking for opportunities. You can see over here, it's not a illiquid coin or anything. It's currently has a fully diluted valuation and market cap of just under $1 billion. That's $900 million. And the price is pretty much traded sideways and somewhat stable. So if you are looking to squeeze some extra juice from the lemon, this may be a viable opportunity for you to speculate on the token. Again, not financial advice, but something to consider. At least know if you are going to opt for that route, what the token is doing and where the token currently is. So if you do decide to use Nexo and you want to make it your home to speculate as well on directional bias, remember that they do have a futures market as well, where you can actually look to start to take some trades. So it works pretty stock standard, pretty similar to what many of the other platforms that you're probably familiar with are already doing. And then, of course, you do have other features if you just simply want to swap, if you want to use OTC. So if you're looking to get started with Nexo, have a look at the top right. You'll see it says buy crypto over here. If you go through to buy crypto, you have two methods. You can either purchase through a card, or you can do a normal bank transfer, also known as an EFT. For those of you that have crypto from another platform and you're looking to deposit that, make sure you're on the dashboard page. Scroll through to the middle over here. It says borrow from, earn up to, and then click over here, add funds. If you go through to add funds, you have various different ways that you can add. In this instance, you're going to choose add crypto. Choose the crypto that you want. So if it's USDC, click USDC and make sure that you're depositing to the correct network. You can change the network. You can see they do host a whole variety of different chains which you can send over. Of course, one of the most used ones is going to be Ethereum. So make sure that your address is correct, your chain is correct, and then withdraw. In my experience, it takes about maybe 5 minutes to reflect into the account. So once you've made the deposit, if you go through onto the dashboard and you scroll down, you should be able to see your balances. Now you got all assets, crypto assets, fiat assets, and stablecoins. I guess I can click on stablecoins because at the moment I only have stablecoins here. So if we go through and we click on USDT, I need to show you something important because some of you may get confused, right? You'll notice over here, it shows my balance is $20,000, but you have your flexible savings, which for me is currently earning 7.5% per annum. But underneath that, it's written cool off balance. So if you look at that, the reason why is because I only made the other $19,000 deposit just before starting to produce this video. So it will show you that this will take a bit of time, right? After 5 UTC each day, this balance will be marked as through and earnable, and it will reflect and you'll immediately start to earn. So that's just to give you an update for those of you in case you come through, just so you understand there is a cool off balance, and that should pop up into your flexible savings account. Now, if you want to create a fixed term savings, you can do that over here. In my experience, what I found through my research, if you go into my research report over here, is that choosing the 3-month option does provide some of the highest yield. So, and you can set automatic renewal as well. So at the end of the 3 months, it will just continue to tick on, and you can start to see what your results look like underneath this section over here. So with that being said, let me know in the comments below what your experience has been with using yield earning platforms, and let me know what strategy you're going to use. What do you think of the strategy in terms of swing trading, holding Tether all the way back down and then reallocating into Bitcoin, then putting that Bitcoin and Ethereum potentially, if you're going to buy some of that, to work for the rest of the bull run? This is a strategy that I've recently started to explore. It's something that I dabbled in the past, but now I'm looking to take much more advantage of it since we have stable platforms like Nexo. So use the link in the description below if you do want to get started. That is it from me. I'll see all of you on the next one. I hope you have a wonderful day wherever you are, and cheers for now.